All right, hi everyone. Welcome back to PKFX YouTube trading channel. So this will be a continuation for our Building Your Trading Journal Part 3. So if you have not watched Part 1 and Part 2, feel free to go and check it out in the YouTube channel where I've actually built the trading journal from scratch. It's very important to understand what are we doing over here. So do watch Part 1 and Part 2 before you come to this video for Part 3. Now, let's continue our progress over here. So far, we have completed like about 15 trades. So we have some sort of decent data, I would say, that we have tabulated over here that gives a better understanding on how this journal is now eventually turning out and what are we actually doing in order to understand or in order to build the profitable edge that we are trying to build from scratch, from zero, right? So this is something that anyone can implement as long as they put the effort into it. And I've also added a few more rows and columns inside the tabs so that it gives us a better understanding on how things are going and what are the tweaks that we can do here and there. Now, the first thing I can say is that I'm someone who prefers colors in my Excel. It helps me to visualize things better, helps me to focus and narrow down my concentration on what I'm looking at. Therefore, if you're someone who's similar to me, who cannot just see something black and white, who has to have some sort of colors in order to understand what's going on, I suggest to throw around some color codes and play around with it. So far, this is the main 4 tabs that I'm building. The first tab being the trade log. As you know, we have already concluded 15 trades and we have mentioned the pairs that we have taken, the exact date and time that we entered. Depending on wherever you are, whichever country you are, you can update that accordingly. And that's why we have the session tab over here, where we kind of select whether it's a London, New York, or Asia session. Even that I've given color codes so that I can easily visualize things. And then the direction of the market, whether it's going to be a buy or a sell, followed by whatever strategy that you're using for whatever grading that you're giving for each and every trade. So you can call it as confluences, and if it meets your criteria, that's the reason you're taking the trade. The entry price, the stop loss take profit, which is the normal things, and the exit price where you exactly exited the market. The exact lot size calculations, I've created a video to see how exactly can you calculate the lot size, how to use the forex calculator. So each and every trade over here was precisely calculated in order to understand what is the ideal lot size to be used for the risk management. So it's not like I'm randomly taking a trade and putting 0.02 lot sizes. If not, you would have seen all the trades to be like 0.02. So you can see over here, some trades are 0.06, some trade are 0.08, some trade is only 0.02, some is 0.07. How did I get these numbers? Well, that's where you precisely calculate what are the lot sizes you're going to use depending on the risk amount that you're going to take for each and every trade. This is how you trade a currency pair professionally, by proper risk management. Next is the risk amount that you're willing to risk. I strongly suggest to start with a very small amount where you can digest the numbers. Now, this is a good example, and I'm going to give a good understanding in why I started with such numbers. Now, these are in USD. All right. So, as you can see, I started off by risking $12.5. Once in a while, I did risk about $25. But why did I start $12.5? It's because for me, I look at it as a money that I'm willing to risk, but at the same time, it's not just an easy money that I'm just willing to throw away. Why do I say this? Is because if you are trading demo account, it's essentially fake money. You can create what sort of account balance that you want with demo account. I get it, to replicate the actual amount that you want to trade. For example, if you're interested to open a $10,000 live account, you can create a demo account with fake money, right? Fake numbers that says $10,000 as well, whereby, let's say, for example, for each trade, you're risking $100, or let's say $500, right? By trading the demo account and risking $500, and let's say you're winning or losing, it doesn't necessarily reflects the same success or failure in the actual account. In fact, it's going to be even more difficult in the actual account. Why? Because the demo account can never replicate the emotion of real money because it's not real, right? So even though you are risking $500 out of your $10,000 demo account, it is still fake $500. You will never be emotionally attached to the trade. So how are you going to trade? I mean, how are you going to train your mental preparedness to win or lose money if the money is never real? At the same time, you also don't want to risk $10,000 if you don't know how to trade yet, or you have not built your personal profitable edge yet, right? But you need to risk some sort of an amount in order to be able to grasp the emotional thought process behind each and every trade. So this is where I believe starting off with a reasonably small account, not $100 or $50 per se, because for example, if you take $100 and you're risking $1 for each trade, you don't even feel the pain whether you win $1 or you lose $1, because essentially $1 could probably only get you a cup of coffee that you're doing it anyway every single day. So majority of the people don't feel the pain or the happiness, so there is no emotion still involved if the account is extremely small, right? If you're taking $100 and risking $1, it feels nothing. And at the same time, if you're taking $100 and risking $50 per se, now that's extremely poor money management, because you're risking literally 50% of your portfolio for a single trade that can literally go up or down. You have no clue. So that's essentially at a stage of gambling, I would say. We do not want to gamble over here. We want to do it in a professional way, and definitely not trying to flip an account or something. If you have your own personal flip account where you want to flip $100 into $1,000, go ahead. That's different story altogether, right? But over here, we are trying to build a data. Therefore, we're going to only risk an amount that is manageable, that is accepted by our mind, and eventually progress to improve the amount. So coming back to this Excel over here, why $12.5? Because I believe in majority of the place that we live in today, a $12.5 or anything above $10 would definitely give you a very good meal in terms of, let it be a lunch or dinner. Now, if you lose the trade, if you lose $12.5, now that is something meaningful. You literally lost a good lunch. So your mind eventually starts talking to you. The numbers eventually means something to you. So once you are able to adapt to lose $12.5, slowly you start increasing the amount so that your mind and your preparedness to lose or win is gradually adapting to a bigger amount. And that's what I'm trying to establish over here. That's the whole idea of journaling, right? I've tried to, like you can see over here, I created a new column called risk percentage. It's exact amount, but in percentage form compared to the actual portfolio amount. So this is pretty small. It's literally 0.5% of the entire account. So even though you win or you lose, it doesn't really matter per trade per se, but the amount is still reasonable for you to feel the emotional pain or emotional happiness to say, hey, I actually won something, or I actually lost something, compared to risking $1 or $2 and winning $4 or $5. You are probably going to start gambling at that point of time, because if you see back-to-back wins, you want to make more, Here on the other hand, whenever you win, for example, these are some of the wins. Let's say you win $30. In some country, $30 can actually pay like electric bills and stuff like that. So it really depends on where you are and your definition of what's a big amount and what's not a big amount. But our mind, human mind, all works the same. And if we are able to build this number slowly, gradually, as we go along with the trades, this will be the best option, which I believe will be successful in the long run. Now, I've already risked this amount and my mind has already adapted to $12.5. I've tried risking 1% up to $25 to see if I'm okay with it. And once in a while, if I win, well, it's great. But also, if I lose the trade, well, it's not that great, right? So I have been trying between 0.5 to 1%. The trades that I'm confident in, I double down, I go 1%. The trade that is, I see like, okay, it's a decent trade, I still stick with 0.5%. Risky trades, I always take 0.5%. I don't want to risk it too much. If I'm confident with the direction of the move, which we will never know whether it's going to go up or down, we are just basing everything based on probability. But there are times where I try to double down on my trades. So that is the reason in the numbers that you're seeing over here. And obviously, if it's a win, I record it as a win. If it's a loss, I record it as a loss. And a trade that was break even, in this case, so far, we only had one trade that is considered break even. This could have been a break even trade, but because it was closed at negative $1, I still mentioned it as a loss, to be fair, right? And the last trade, this one, which was supposed to be a winning trade, ended up getting stopped out because of the weekend gap. This was supposed to be a win, but unfortunately it was a loss. I still record it honestly as a loss as well. You have to be super honest to your own self. You cannot be playing around with the journal. You got to be very, very honest in the numbers that you record over here, because it is literally a reflection of you. Trading is about you versus you. And if you're able to master your emotion, then you would be able to master trading. So now what I've done so far is, because I've started off in this journaling, I mentioned over here the deposit was $2,500, and we started trading with a very low amount to get used to the amount. And now that I'm happy with the trades and how it's going, after concluding these 15 trades, I've added another $500, so raising the total amount to $3,000. So now when I risk 0.5%, it's going to be $15 instead of 12.5. And when I risk 1%, it's going to be $30. And eventually this is what you want to do, right? You make a few trades, you learn the lessons, and you try to implement, you try to get more wins. You will definitely get some losses. In fact, in the beginning stage, when you are trying to figure out the edge, your losses may be more than your wins. But as long as you are having proper risk management, it is extremely hard to blow your account. Like, let's say, for example, you're risking 1% per trade. It takes 100 trades to blow your account completely, 100 back-to-back trades to blow your account completely. So the chances of you to blow your account completely is very, very rare. That's probably close to none. Like, you wouldn't be getting 100 losses back-to-back like that. Unless you are trying to flip an account, that's a different story altogether. But this is where proper risk management, proper money management comes into play. And by playing small like this, you eventually build your own database, which will reflect the profitable edge in the long run. And you will start realizing that you start getting more and more wins. And that's where your account starts growing by itself. There is two ways in growing your account. Number one is by increasing the capital yourself. And number two is by making the wins. When you're trading a small account, if you have the means to slowly, grow your account by adding on more capital with proper risk management, then that is one smart thing to do, compared to you taking the trade and risking a huge percentage on the trade, because that increases the chances of you to blow out the account. Yes, if I risk 1%, for example, this trade, right? Euro GBP. If I risk 1%, I get $25. But if I risk 10%, I get $250, right? If I risk 50%, that's even a huge amount. So you don't want to go by the numbers, because obviously when you increase the percentage, the number is going to look big as well. But you got to understand, this is money that you place on the table, that you're risking, that you're willing to lose in order to make a certain reward. So it's all calculation basis, right? And if you're not willing to lose big amount, don't risk big amount. Don't go for big percentages. Try to keep it small, unless otherwise you're confident with certain trades and you want to double down. That's a different story. That's by choice, people to people basis, right? Okay, so that's about it for this particular tab. As we have been updating in the previous videos, you have seen line item by line item when we were updating all these things, and I've been giving color codes. And these are some of the lessons learned that I want to go through later on in a separate video on all the results and what can I learn, which I can improvise on the upcoming few trades. I've concluded 15 trades, so I have some sort of numbers that I want to share. Now, I'm moving on to pair performance tab. over here, now we have, I would say, some sort of numbers that we can talk about. It's not what we are expecting yet, because I told that at least 100 trades would make sense to go through this database. We only have like 15 trades right now, so we still have a long way to go. But at least there are some numbers that we can see how it's evolving, right? So this is important. So the first thing I notice is that despite having almost 20 different currency pairs that I'm analyzing every single week, I see that every time I narrow down, there are specific currency pairs that I'm consistently trading, because I'm actually seeing opportunities more in those currency pairs as compared to the other currency pairs. That's why over here, for example, AUD-CAD, not a single trade taken yet. AUD-JPY, not a single trade taken yet. In fact, there's quite a bit of zeros over here, which means majority of the current pair doesn't even have data yet. Despite the fact that every week I'm analyzing almost 20 different currency pairs, somehow the opportunity seems to be lining up on certain currency pairs alone. And that's why like even 15, even 20, 30 trades is not sufficient yet. 100 trades at minimum, at least you have some sort of data to refer to. And by the time you hit 200, 300, 400, 500 trades, now you have really solid data to rely on. That's when the profitable edge will start appearing, right? Now, what I want to show here is this one, GBP-CAD. So GBP-CAD, we have taken 2 trades so far, out of which one was a win, one was a loss. So the average win rate is now showing 50%, right? And overall, under GBP-CAD currency pair, I'm actually in profits despite having 1 loss and 1 win. Overall, I'm in profits, right? 4.75. Now, let's say instead of 2, over time, right? Let's say I've done like 20 trades, out of which, let's say I've had 3 wins and let's say 17 losses. This is just example numbers, right? So at that point of time, right, whatever the numbers may be over here later on, depending on the update on the trade log, now you see that the percentage has dropped from 50% to 15%. So after taking about 20 trades, this particular table starts showing that, hey, you know what? Every time for some reason you go into a trade for GBP-CAD, the chances of you losing is way higher than the chances of you winning. So you're only winning 15% of the time. Out of the 20 trades that you have taken, you're only winning 15% of the time. So let's say you have another currency pair. Let's say instead of GBP-CAD, GBP-CHF, you have taken 20 trades, out of which, let's say you have 10 wins, all right? And let's say you have 9 loss, and let's say 1 break even, right? So at this point of time, or let's say, let me modify this to about 9, and this as 7, and let's say this is 4, for example, right? Okay, so at this point of time, okay, this is just an example. I'm saying that, hey, you know what? Compared to GBP-CAD and GBP-CHF, right, these 2 pairs, let's say I have 2 different opportunities at the same time. I can enter 2 different trades at the same time, right? One is in GBP-CAD, one is in GBP-CHF. I come back to this data. This is where it helps me to evaluate which trade do I prefer to go, right? And here I would say, you know what? My chances of wins somehow aligning higher when I'm trading GBP-CHF pair. Maybe the way I'm reading the candles, maybe my trade method seems to be aligning better in GBP-CHF because it's yielding for me higher win rate compared to me entering GBP-CAD. So if both of the strategy is the same, both I want to buy, both the strategy confluences is the same, I may choose to go with GBP-CHF as the trade preference compared to GBP-CAD, because high chances I will win the trade compared to GBP-CAD. You get it? So this is what we are eventually trying to build. And you can see that the higher the number, the more accurate the number is going to be, the higher the number of trades, right? So we need a lot more trades to go. I don't want to screw up the formulation over here, so let me just reverse back everything. And yeah, now coming back to this one, yeah, boom. Okay, so eventually we're going to keep building the trade logs completely over here until we reach like about, let's say, 50 trades. And when we are already at 50 trades, we can always come back to this pair performance and see what are the trades that we are constantly taking, what are the pairs that we are never trading at all, like what's the reason behind it, and what are the pairs that is constantly causing us to lose, right? Like for example, ADCHF, I only took one trade and it was a win, therefore it's showing the win percentage is 100%. Is it accurate right now? Probably not, because the database is super small. One trade out of which I got one win. What if the next trade I take, it's a loss? Now this win rate is going to fall down straight from 100% to 50%. So I would say at least a minimum of 10 trades each. And at that point of time, we can say, hey, it's reasonable data for us to say, high percentage of success or not. And this will help us to narrow down into our top 5 currency pairs or top 3 currency pairs that I'm always going to look at moving forward, because I know that if I'm trading this top 3 currency pairs, high chances I'm going to be winning. So that's how we will evolve over time. And you will see all this. I'll be recording all this. I'll be documenting all this. I'm pretty sure by end of the year, when we are almost close to December, we'll have sufficient amount of data to be able to analyze all these things. Moving on to the equity curve. So equity curve over here, right? This pretty much has been updating all the 15 trades. The last one was a bump up here. If I remove this $500 that I invested, if I remove and just keep the number over here, this is the actual trade scenario. For me, if I really zoom out, we are basically just slightly going down, but literally like break evening somewhere just there, right? We are not making any big amount or losing any big amount, because the amount that we are risking is very, very small, tiny. So when I added the 500 USD over there, it reflected as well. So this is not a win, this is just depositing capital. Over time, when you're looking at 1000 trades, this is probably just going to look like a straight line up. So you know that every time you top up some amount into your capital to grow your portfolio, which is one way of growing your portfolio as well, right? It's going to show like a straight line up in the long run when you have like almost 100 trades and so on, right? And all this will be the trades that you're taking. So ideally, we want to have the trend to be almost close to being flat or upwards, and any capital top up to go straight, and then like eventually building like a staircase, right? That's what we want to build in the long run. Next will be the dashboard. So here I've added this particular rows and columns. Basically what this one says, let me just quickly go through all this. So these are the total trades: 15 trades, 3 wins, 11 losses, 1 break even. The win rate overall for the 15 trades is 20%. The average profit is 27.2. The average loss is negative 12.27. This for now is good. As long as your profit is higher than your losses amount, it is good. So you have a good risk to reward. Your confluences is based on the strategy that I'm using, 95%, which is good. Anything for me above 75%, or I would say, let's say 80%, right? Anything above 80% for me, I would say it's a good confluence average. Most of the trade that I'm taking is like A+ setup, so I'm happy with that. Profit factor, average risk to reward, average risk. So this has to become positive number. We have to work towards this. Same for the Sharpe ratio. Best win streak. So far, we have not seen a proper win streak yet. So far, it's only been like 1. Every time there's a win, there is loss as well. But when we started off to build the trade logs over here, we can see 1, 2, 3, 4 back-to-back losses that we had before we had our first win. So the longest streak was 4. That's why you're seeing worst loss streak as 4. Ideally, we want to grow the win streak as well. This over time is also important numbers. Why? Let's say we have taken like about 100 trades now, and we have a worst loss streak about, let's say, 7. So that way, in the future, we can predict that, hey, if we are having back-to-back losses, we know based on our profitable probability that we are building over here, that most to most, we may get 7 or 8 losses based on past historical data before the next win comes in. So this helps you to evaluate even better, aim for the trades that you know it's going to be a win, aim for the currency pair based on this pair performance that can generate you more wins, and double down on the trade to gain higher win rates. So that's where this will come in handy. Right now, it's nothing yet. It's still small amounts. I'm sorry, it's still small numbers, right? So we don't see anything yet. We need more data. And then best session, the most traded session has been New York. As you can see, total trades has been 7. This is just to show that, I'm taking majority of the trades in New York session. For some reason, the opportunities seem to be aligning during the New York session, right? Obviously, because that is where you have the highest liquidity. The New York session and the London session is where you have the highest liquidity and highest volatility, and that is the best time to actually be trading, right? And even though we only have like 15 trades, it's already reflecting. You can see the majority of the trades seem to be lining up to New York and London session, right? So average win time duration and average loss time duration, I need to figure out a formulation for this, which I'll update in the upcoming videos. So if I go here and if I were to say, hey, you know what, I'm going to filter down just the wins, right? It should be like 3. Okay. So out of these 3 wins, how much of a time am I taking? So this is random. Right now, one win took me 3 days, another win took me 7 days, another win just took me less than a day. So as we build more and more and more wins or losses, right, we will know how much time are we taking for each trade in average, and that will give us an indication that, hey, let's say we have a trade. Do I need to close out, or do I let it to play out longer? Let's say my average win trade duration comes up to about 3 days, for example, right? After like about 100 trades, it comes up to about average 3 days. I just entered a trade and the trade is currently on losses. I know that if I allow time, the trade may eventually turn into profits, right? Because my average win duration, ideally after like 100 trades, is showing that in average when I hold for about 3 days, I'm winning more compared to losing, right? So this would be a good indication for us in the long run, whether should I continue to hold a trade or not. So you see, all these little things is what eventually builds the profitable edge, and that's why we need to build the data without any biased opinion on each and every individual trades. And that will be all reflected over here. I need to create a formulation for this one. That's why I marked it as yellow, which I'll update. Over here now, the sessions. So so far I've taken 15 trades, right, in total, out of which 7 was in New York, 6 was in London, and 2 was in Asia. Both the trades that I took in Asia has been a loss. That's why it's showing 100%, right? But it's only 2 trades. The numbers seems to be exaggerated over here, but yeah, it is what it is. The percentage is what it is, right? London session, I had like 1 trade that was break even, so 1 trade is reflecting as 17%. Eventually, when you have like a lot of trades over here, these percentages will be even more accurate, right? So we need to build the data. The goal over here is to continue building the data. So that's about it, guys. That is the trading journal part 3 that I've updated so far. We are checking per session basis as well. The numbers started coming in. The equity curve looks pretty decent, pretty okay, right? And I've topped up as well. So now I'll start risking slightly more. Let me just go back to this. Yeah. So I'm going to risk slightly more in terms of the capital, while maintaining proper risk management as well, so that I can gather more and more data. And probably we'll do another review once we reach about 30 or 50 trades. I'll see how it goes, and then we'll update accordingly. So that's about it, guys. And if you have not watched part 1 and part 2, go and watch that first. It will definitely help you to build your own trading Excel, right? Trading journey Excel, and then start tracking your trades professionally. Eventually, all this will make sense for you. Like, this is literally free education, so make use of it, and all the very best to you guys. All right. Thank you so much, guys. Have a good day and take care.